Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at none other than Alibaba, ticker symbol BABA. If you've been following this one for the past couple of years, you will know it has been consolidating, not much movement, but we're going to go ahead and see if this stock deserves to be at $82. We're going to see what institutions and hedge funds are doing, and we'll look at some advanced charting for supports and resistances to see where we could see potential support or having the stock come down to a certain price. So without further ado, let's go ahead and jump on in and shrink my head so you can see everything. Maybe. My head does not want to shrink. There we go. Whoa, whoa, whoa. All right. So looking at Alibaba on the monthly, because we like to look at the bigger picture and whittle our way down. Wow. Okay, so the stock used to be around 320. Now it is trading at 82. We'll see if that's because revenues are down or other political factors, communist dictatorship factors. But looking at the stock, it is at $82. Again, it's been trading at this level since 2022. And the stock, the same levels go back to at least 2015. So that's pretty crazy. Looking at our RSI, the strength, it does look like it is increasing. So going in the favor of the bulls. Our MACD momentum here actually looks like it is increasing as well. Money flow, it is going down, but we're going to go ahead and see what institutions and hedge funds are doing. And our relative momentum indicator is that scraping the bottom of the ocean, and it actually came out of the depths. So it's no longer scraping the wreckage at the bottom of the barrel or the bottom of the ocean. It's now slowly coming back up for air. So looking at all these major indicators that I adore, strength is with the bulls, momentum's with the bulls, money flow, questionable, and relative momentum is going with the bulls very slowly. Again, this is on the monthly chart, so things move slower, but once they start moving, they move. And typically, myself, I like to get into a stock a year or so before it starts moving. I capture long-term capital gains that way. And I give this stock, I'm investing in the stock, hopefully at a discount, and the stock is, our company is improving. So with Alibaba, that does fit the narrative. I mean, looking right here, it's been trading within this range for the last 2 years. And we can see a lot of nice green bars down here as well. So very, very attractive is what I'll say. And the last 2 months, each month, I guess last 3 months, the volume for the following month increased. So we're seeing a little bit more of organic natural accumulation. Looking at sales. So sales are killing it. 2024 on the trailing 12 months, we're at 131 billion, 490 million. Shares outstanding, this is absolutely fantastic. You love to see this go down. It is a natural and organic accumulation of the shares by institutions, hedge funds, retail, or people like you and I. So that is great. Let's all take a moment to drink water because my throat, it's a little scratchy for some reason. Okay, and our earnings per share. You can see it is rebounding. It's kind of fallen from grace down here, but then you can see it's nice and up to the right. Sales up and to the right overall. Shares outstanding down to the right, which we want to see. So, I mean, so far, this is knocking it out for me. They do offer a dividend, which is great. Forward price to earnings is very low compared to our price earnings now. So if you have seen my other videos where I go back in time, look at Tesla, Apple, AMD, Nvidia, AMR, TD, TDS, you'll see that a lot of times the price to earnings is really high, but the forward PE is very low. That goes to show you that the company has some major momentum behind it. And trade, if the stock and the company continue on with their guidance, revenues, margins, EPS, this company is extremely undervalued going into next year. So This is great. Quick ratios over one. That is fantastic. Debt, you can see 0.22, long-term debt 0.19. So you can see that they're actually addressing the debt as well. Earnings per share this year, they're showing negative. Um, that could be a strategic thing. It just really depends. But I mean, based off the stock price the last 2.5 years, I mean, the stock is trading at 2015 levels. So it makes sense. It makes sense. Earnings per share next year, 12%. And then they're guiding for 5 years in advance, which I don't really trust that. But look at the past 5 years and you can see if they're resilient or not. So EPS past 5 years, -2%. So not resilient in the EPS fashion. However, sales over the past 5 years, 20%. That is great. At 19.89%. Institutions own 16.86%. Again, that is older data. This website up here that I am hovering shows data up to the day. So it will be more up to date. So that will be interesting. Stay tuned. Gross margin 35. That's incredible. They're profitable. Average volume is insane. So there's just one thing I don't like about this company, and it's not just this company. It's just that it is a Chinese company, and their leader, dictator over there can stop a company or intervene, like with the Jack Ma scenario a couple years ago, where he can disappear for a while, and it really just raises questions. I'm not going to say that's going to happen in the future, but I'm just saying there's a lot of power politically over there. So on the macro. However, I mean, the stock went as low as $66 recently. All-time low for this cycle, 2020 area, was around $59. So buying it at 82 does not appear to be horrible. And we're starting to see reverse metrics reversing on the monthly, which again, it takes some time, but once it starts moving, it starts moving. So we're going to bust out the handy dandy proprietary calculator, and we're going to go ahead and see what this stock is actually worth. So they have a market cap of 178,860 million. I need to add 30 more zeros. Okay. Did I get that right? Yes, I did. Okay. And the income, they make 9,630 million. And sales of 131,490 million. Absolutely insane. Let's go down and look at the cash, baby. And we also want to make sure, don't forget to do this. Go down here and you see it's value USD, thank goodness. However, there's been times where I go through my calculation and it's in another currency and I've got to go and just translate the conversion, and it is annoying. So anyway, before we move on, Q1 this year, they made 30.8 billion. Q1 last year, 30.4 billion. So about a $400 million increase. Q2 this year, 33.5 billion. Q2 last year, 33.35 billion. Slight increase, but it's still an increase nonetheless. Gross margin, 39%. That's Q2 of this year was the highest gross margin they've had in a while, it looks like. So good for them. Let's go on with our calculation, baby. All right. They've got some cash chilling. All right. They've got some cash just chilling hard. So 68,133,990,000. Did I get that right? Yes, I did. Okay. Okay. And I added too many zeros there. So one. We'll go up to the market cap and we're going to adjust because I had 1 trillion in there and that's not quite right. Okay, total debt, we're at long-term debt of 24 billion, 501,210,000. Okay. So really quickly, before I go up, total assets 245 billion, total liabilities 100 billion. Okay, assets dwarf liabilities 2.45 to 1, meaning for every one liability, they have 2.45 assets. That is chef's kiss. However, I mean, it is a Chinese company. If you've seen my channel for a while, I'm a little bit skeptical. However, I mean, these levels are pretty attractive. Um, okay, so we're gonna go back up here and just double check. 178 billion is the market cap. Right now I have, so I do need to add two zeros. 178 billion, 860 million. Yes, okay. And shares outstanding, we have 2 billion, 430 million. Okay, and I do want to just asterisk caveat here. This company, Alibaba, does offer a dividend, so they are giving some of their cash away, which does not account for this calculation. Just a heads up. So, without further ado, potential stock price is $149.63. Analysts have a target of $109. We have two $100, $85 for 2024. $149. I mean, we've seen $149 before. No, no new price there. So I like my $149 price. I don't. Let's go here real quick. I haven't charted this one up before. Interesting. No, I have. Okay. We're gonna let this load. Okay. So $149 stock price is what we're seeing. I potentially see many cup and handles within here, but nothing super clean. Nothing super clean. I mean, potentially here, 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 and here. But I mean, that's, we'll see. We'll see. Okay, so institutions own 16.86%. Again, I said that was old data. New data they actually own. Drum roll. No information. So what we got to do is we have to do it the old-fashioned way. Unfortunately, we can see the chart here. You can see it's picking up nicely. Okay, they have 469,832,436. We're going to divide this by 243 billion. 2.43 billion, sorry. 19.33%. That is an increase of about 2.5%. And this is on billions of shares, so that's a significant amount. So there is an increase in ownership, as we can obviously see here. Let's see if the Vanguard's in the black. No. SoftBank sold 1.7%. Interesting. Do we have any Vanguard or BlackRock ownership in the house? I'm just going down, scrolling down as much as I can for my Control F to pick it up. Oh, no Yes, okay. Vanguard. Here we go. 301,000 shares in a variable insurance fund. 596,000 shares in international value fund. What about BlackRock? BlackRock has 72,000 in one fund. 157,000 in another fund. Okay. So, that's as far as that goes. I want to just check something here. Apologies. Okay. Okay. I just wanted to make sure that if BlackRock did have any ownership, it would be listed here, and it looks like they don't. So, all right, let's go on to some more advanced charting, baby. All right. Dude, my mouse. Oh my God. Jeez. Okay. So I've charted this before, and I don't know what this means. I'm going to remove this because I don't know what this means. All right. Um, so what I want to do is I want to see if we've actually hit our all-time low for this cycle. So we're gonna go to our 319.32. It should snap. Go down here. Okay, we've got some 10 out of 10 support on here. Good test there, almost. And then looking here, I mean, it's kind of choppy. So the purpose of this Fibonacci arc was to determine if these candles had uh, high respect for the candles going down, because then what we could do is go here and try and track it up. But as we can see, there's not much historical candles to go off of. So we're going to remove this just to make it clean. But wow, absolutely fantastic double bottom on the monthly. And now my mouse does not want to work. There we go. Absolute beauty, double bottom there. And then we do see heavy resistance right here. Right. Right there is pretty good. Could I get away with that? No. Okay. So again, double bottom support here. 1, 2. And we have good resistance right here. And this stock is trading in a beautiful, beautiful channel. We could tighten it up. Could we even? No. This is pretty good. Okay. So we're trading in this channel. It's been in this channel for about 2 years, broke up, came back in, perfect supports. So, I mean, looks like they started offering a dividend pretty recently, actually, too. More water. So, yeah, I like this. If this could test again 73, 74, 75, that would be great. However, considering my risk tolerance, I would be fine adding here. If it goes down, adding again. I mean, it's been trading in this um, consolidated period for 2 years, and it's trading at the same level as 2015. Just craziness. So I like the risk reward here. I will likely start adding this to my Robinhood account challenge. You'll see me post about it in my YouTube community page. I post my Robinhood trades there. And again, I'm trying to break 20% annually in returns and also beat the S&P 500. So yeah, I mean, I like Alibaba here. It could get down to 72, where we've seen this test 1, 2, 3, 4, 5, 6, 7, 8 times. Could we make it number 9? So yeah, we could say come back down another $10. But at the same time, if the stock rocketed up 8, 10, $15, would you be upset if it left without you? I'd be pretty annoyed. So having at least some exposure, albeit not hundreds of thousands of dollars, it's still something. So I like this one. Let me know what you guys think. I appreciate you if you made it this far. Consider subscribing or leaving a comment. It does let YouTube know that. It should bring more people to my channel to learn and check things out. So thank you for coming along with this journey. Have a great day. See you later.